when you look at China, I know that within the ETF that you particularly manage, there are some companies with exposure to China. How do you feel about the economy? How do you feel about the consumer there?
I think it's we do our stock selection pretty carefully. We look at where they're exposed to, rather than making a macro call. We look at what they're exposed to, and then whether they have competitive pressure there. And our ETF and a lot of stocks we invest in, broadly speaking, are driven by secular tailwinds. So regardless of economic outlook, cyclically, we believe the selection that we have, we select them carefully, will enjoy sustained growth tailwinds, and that's how we do it one by one, really.
And when you're looking at the one by one tailwinds, how much you have to bake in the anxiety around a headwind of geopolitical tension, of a new administration that comes in that makes relationships with China ever harder, particularly for US exporters?
We certainly are not here to make any predictions about political outcome or policies. It's a very difficult thing for us to do. But rather what we do is we do take into consideration in terms of the risk factors, if they are exposed, and we certainly will increase the discount rate when we think about the valuation. But then again, it goes to one by one and see how they are positioned.
Okay, well, when we're talking, therefore, more thematically, are the tailwinds for you still all about artificial intelligence, whether or not a particular chip maker has a large exposure to selling their very high-end chips into China? The tailwinds are so strong that at the moment you can still stick by these names. I know you can't go into individual selections, but I mean, we've all been talking about NVIDIA this week, for example.
When we look at these companies, what we look at is the overall exposure. So China is part of it, but China is not the sole driver for the growth. So when we look at it, we can see, NVIDIA, for example, China is part of their business, but that's not the majority of their business. And the other parts of the business is so strong that, we can do scenario analysis whether or not China goes up or down, what does it do to the overall. And then given the supply-demand constraint, the constrained environment that we're in, they can easily reallocate to other areas. So that's kind of really how we think about it, is the overall geographic exposure.
Let's talk, therefore, about the hype cycle that we've been in, the huge valuations baked into certain AI-exposed names. You're comfortable with that at the moment? You feel that the demand is so strong that, and indeed supply issues are limited, that you can continue to plow money into companies that have risen so fast already?
What we think about it is, on the valuation front, what we care is over long term, can they sustain the profit pool? Who has the pricing power? I think that's what ultimately matters. In the fast-growing phase, some of these companies will look very expensive. But we really need to look out over the 10-year horizon. Are they going to be the market leader? Do they have competitive differentiation? Therefore, they can garner a bigger part of the profit pool. Not every single one of those are going to be a winner. So it's actually a great time for alpha investors, frankly. You get to choose the one that you truly believe in. And then there are ones that's frothy that we do not believe in, and we choose not to invest in them.